doing quite well is Eternal ahead of its Q1 numbers. In fact, 3% uptake on that particular counter ahead of that announcement of its first quarter earnings later today, with the street also penciling in profit and margin numbers to fall. But it's also the strong revenue growth that is being factored in. Mahima, in fact, is standing by with that update.
Right. So, as you rightly said, PAT might fall and margins might take a hit this quarter for Zomato, that is Eternal. Revenue area is around 57% and that's probably what the street is liking, and which is why the stock is up in trade today. EBITDA may fall, maybe flat in fact, not even fall. Margins may fall to around 2.7% mark versus that of 4.2%. This is on YOY basis, and net profit may fall around 58% on YOY basis. Or in terms of the QOQ numbers, revenue may rise around 13.5%. EBITDA may rise almost 1.5 times, margins at 2.7% versus that of 1.2%, and net profit may see a growth of around 1.7 times. So QOQ numbers is something that the street is probably penciling in, and why the stock is up. In terms of what to expect, of course, strong growth in terms of revenue, which will be driven by Blinkit as well as Hyperpure. EBITDA could see sequential improvement. PAT likely to drop, but overall QOQ up QOQ will be up is what we are penciling in. Continued losses in Blinkit because of dark store additions and elevated costs in terms of going out business. Key things to watch out for. First thing, Blinkit's profitability as well as margins, and what's the outlook for the same. Food delivery cost structure and competition in the quick delivery space, plus the overall gross merchandise value growth in both food delivery as well as Blinkit, and management's commentary on store expansion plans going ahead, because dark store additions has now slowed down as compared to what it was 2 quarters ago. So this is everything that you need to know about Eternal earnings, and of course we'll have to wait and watch out for as to how they fare.